So I hope that you have studied the previous videos. And let's continue our journey towards learning and start our today's lesson with a recap that the prices move in a wave-like pattern, which we call trends. So prices move in a very simplified form, something like this. In a wave-like pattern, they go up and they come down, but they don't go immediately up and immediately down. Rather than that, they go a little bit up and come down, and so on and so forth. Now, let's see how we define these moves. So here, this price, for example, it was at $2 and then it goes up. So maybe it goes to $5, $4, $6, and then it comes back. Now, this is an upward move, and this move to the downwards, we call it a retracement. And when prices are moving in an up wave, you know that we call it an uptrend. So if we see here, the prices are in uptrend, while here, when prices move in a wave-like pattern but towards downside, this is a downtrend. So I will just write D for down and T for trend. But what happens here? We have already studied this. What happens here? The prices are not moving up and not going down. This we call a range, or in this scenario, it's, what is it? Yes, it's a distribution, which we have studied in our previous video. And what is this area? Where again the prices are moving in two particular levels. They are not going down and they are not going up. This is also a range. And in this scenario, we call it what? Yes, accumulation. So when there is an uptrend and there is a pause and a downward move starts, so that is a distribution. And when there is a downtrend and there is a pause and up move starts, that is called an accumulation. So now I told you that wave-like patterns. Now, how we study this in more details? We study these highs and lows, which shows us that this trend is in an uptrend, it's a range, or it's a downtrend. So let's say, for example, the price was here and the price made a high, but here price stopped and reversed and made a low, but this low was higher than this low, so we call it a higher low. So this is a higher low, and the price moves in the same pattern in an uptrend. So it will continually make higher highs, higher lows, higher highs, higher lows. So if something like this is happening, so this is an indication that the prices are moving up. While in this case, this was the price and the price made a low. But when price retraced back, it was not able to make a higher than this high. So we call this as a lower high, or lower high. Yes. So now the prices make lower lows, lower highs. So if this is happening, we know that the market is trending downward. And this is really, really important concept for us, because we are going to trade only trends. We can trade these areas, but that's something different, and we will learn about that also. But our main focus should be to trade trends. Either it's an upward trend or a downward trend. So this concept should be clear by now, that when price move up, it make higher highs, and if the price stop to make higher highs, we know that the price is no more in uptrend. And when it starts doing lower lows and lower highs, we know that the price is in downtrend. And when it stops, we know that the price is no more in downtrend. So this is really basic concept and really, really important to understand. This is the end of this part, and I hope that you have learned a very simplified form of basic moves. But let me tell you one thing. These very simple concepts which I explained to you have changed my trading journey a lot. My advice is to practice these lessons as much as possible, and you will become much better in your decisions when you are taking trades. Thank you for your time and hope you enjoyed this video.